right? You ever wonder who's behind, like, some of the biggest deals and brands out there? I'm talking, household names, the big players,
Yeah.
the kind of companies that make you go, wait, they own that.
Right.
Yeah. So today's deep dive, we are all about lifting the curtain on one of those players, KKR. And we're going deep, deep, deep into their world. Specifically, their
Their
finances.
money.
Yeah, their money. And we're going to do it using their own 10K filings from the past 5 years.
Yeah, these filings, they're not exactly, beach reading,
Right.
but they are a gold mine. We're talking strategies, risks they're taking, even how they pay people. A real peek behind the curtain of a financial giant.
Exactly. And for those of you who maybe haven't curled up with a 10K before,
Yeah.
don't worry, that's what we're here for,
That's right.
to break it down.
Absolutely.
But first things first, before we get into like the nitty-gritty of KKR specifically, let's do a super quick refresher on private equity itself.
Yeah.
So think of it as kind of like high-stakes investing. But instead of stocks, GameStop, whatever, it's entire companies.
Yeah. It's really about raising capital from like big time investors, pooling all that money together and then using that huge pile of cash to buy, improve, and hopefully sell companies for a profit. And these firms are not just passive investors like, oh, we'll just sit back and see what happens. No, they get involved in the operations of these companies. They really roll up their sleeves and try to boost the value before they, cash out.
So it's like flipping houses, but instead of houses, it's like multi-million, even billion-dollar companies.
That's a great way to think about it.
Sign me up.
Laughs. There's a lot more at stake than granite countertops.
Right. Okay, so all right, so they're buying these companies.
Yeah.
But how do private equity firms like make their money?
Yeah. So that's a key part of this whole equation. There's two main ways. Management fees and something called carried interest.
Okay, management fees, that's pretty straightforward, I think. They're managing this money, so they're taking a cut, right?
Exactly.
But carried interest, I got to be honest, that always sounds a little more mysterious.
It can be. Carried interest, or carry, as it's called in the biz, that's where things get really interesting. It's essentially a share of the profits that the firm gets to keep, but only after they return the initial investment to their investors. And this can be huge. We're talking like life-changing sums for those involved.
Okay, so we've got these firms like KKR. They're raising these massive funds. They're buying companies. They're aiming for these big returns. They're taking their cut. But here's the thing. KKR doesn't just stick to one type of investment, do they? Their portfolio is like incredibly diverse.
You're exactly right. And that's one of the things that makes analyzing their 10Ks so fascinating. They're involved in everything. I mean, we're talking real estate, infrastructure, credit, energy, technology. They even have their hands in these like newer areas like impact investing, which is, a sign of the times. They really do cast a wide net.
Okay, so let's get specific. Like looking at their 10Ks, what are some of the sectors that like really jump out at you? And what kind of risks are they taking in those areas? Give us the good stuff.
Okay, let's take the oil and gas industry, for example. Now, this can be an incredibly volatile sector, right?
Yeah.
Fluctuating prices, environmental concerns. But if you look at the 2021 filing, KKR, they acknowledge these risks head on. But they also clearly see the potential rewards as outweighing those risks.
It's interesting, right? Because like with all the talk about, moving away from fossil fuels, they're still willing to dive into that world. So it speaks to, I guess, like their long-term strategy.
That long game.
Yeah. But we could spend all day on oil and gas, and KKR's playground is much bigger. What about their real estate ventures? I mean, they're not exactly flipping houses, are they?
Outsiders.
No. We're talking massive commercial real estate holdings. Office buildings, apartment complexes, industrial properties. And this is where it gets really interesting. Remember those level 3 assets we discussed earlier? The ones that are like notoriously difficult to put an accurate value on?
Right.
Well, real estate plays a big part in that.
Okay, so we're going from like oil fields to skyscrapers.
Welcome to KKR.
Talk about a diverse portfolio. But before we get like totally lost in the concrete jungle here, let's talk about something else that's super important when it comes to firms like KKR. How they handle like potential conflicts of interest. I mean, you're managing billions and billions of dollars from all these different investors, right? And they've all got their own like goals and timelines.
Right.
So how do you make sure that as KKR, you're not like favoring one over the other? Yeah, it's definitely a tightrope walk.
Right.
And their 10Ks, to their credit, they actually address this pretty directly. Like, for example, they acknowledge that potential conflicts could come up, especially when they're dealing with, like, securities that might be held by multiple funds that they manage.
Okay, so they're at least admitting that it's like a possibility. But how do they actually try to like prevent that from happening? What's the plan of action?
So, like most private equity firms, they have, a whole slew of internal policies, dedicated compliance teams, independent board members, all providing oversight.
Right.
Now, the really specific nitty-gritty details, those aren't, going to be laid out in a 10K, but the fact that it's acknowledged, I think, is an important first step.
Okay, transparency is good, but at the end of the day, it's the money that really talks. Right?
Laughs.
Always.
So what do their filings actually tell us about how KKR compensates its people? Especially those at the tippy top.
Yeah, get ready for some big numbers.
Oh, boy.
Because remember carried interest that share the profits we talked about? Well, the 10Ks give us a glimpse into just how massive those sums can be. We're talking like eye-popping figures, even for the finance world, which, let's be honest, is used to dealing with big numbers.
Yeah. Now, give us an example. Like, what kind of numbers are we actually talking about here?
So their 2021 filing, it actually breaks down how it's calculated, and it even mentions this fascinating concept. It's called a netting hole.
A netting hole.
Yeah.
Okay.
I know, right? So basically what this means is that, like, even if a fund is doing well overall, the partners, they don't actually get their full carried interest on certain investments until these holes, which are essentially losses, are filled.
Interesting. So it's kind of like a way to protect investors in a sense, like make sure everyone's incentivized to hit those like long-term return targets.
Exactly. Everyone's in the same boat.
Right. But even with those safeguards in place, I mean, things can still go wrong, right? That's where like clawbacks come in.
Yes, clawbacks, the financial do-over, if you will.
Yeah.
Basically, it's a way for firms to recoup carried interest that's already been paid out if, like, down the line, it turns out those profits were maybe based on shaky ground.
So it keeps everyone honest, or at least tries to. All right, but let's shift gears for a moment and talk about something that we touched on earlier, which is like how private equity firms, KKR included, how they actually put a value on their investments.
Yeah.
Especially those like tricky level 3 assets.
Right, because, unlike a stock where you can just look up the ticker symbol and see exactly what it's trading at,
right,
with things like, real estate holdings or private companies, it's not so straightforward. There's no, like, constantly updating stock ticker.
Right.
So it really becomes more of an art than a science trying to figure out what these things are actually worth.
Okay. So how do they do it? Like, do they just throw darts at a board and hope for the best?
Laughs. If only it were that easy. No, their 10Ks, they actually give us a little bit of a peek into their process. They rely on a mix of things. So they've got their internal experts, of course. They bring in independent valuation firms for, like, a second opinion. And they use a bunch of different methodologies and models. Like, one that they mention is discounted cash flow analysis, where they're essentially trying to project, like, the future earnings of an investment.
Okay, that sounds really complicated. But what I'm hearing is there's a lot of judgment involved. Like, It's not as simple as just, looking up a stock price.
You got it. And KKR, they actually even acknowledge that subjectivity themselves. Like, in their 2020 filing, they point out that their auditors actually flagged this whole level 3 valuation process as a critical audit matter, meaning it requires, like, extra scrutiny, extra attention.
So like alarm bells, even if they're like slightly muffled alarm bells.
Well, I wouldn't say alarm bells necessarily, but definitely something to be aware of. And this actually brings up, I think, a really important point for, your average investor out there who might be indirectly exposed to these types of assets. Like, what should they be taking away from all of this?
Yeah.
I think it's just a good reminder that even with all the regulations in place and, all the sophisticated methods that they use, there's still inherent uncertainty when you're trying to value these illiquid assets. So transparency is key. And that's, I think, where these 10K filings can be really valuable for those who are willing to, dig in and do a little bit of reading.
Absolutely. It's all about like understanding where your money is going and the potential risks involved. Mm-hmm. But you know what? Let's not dwell on the potentially scary stuff for too long. We've talked a lot about the present, but what about the future? I mean, KKR is a giant, right, in this world.
Oh, yeah.
Where do they go from here? Are they content to just kind of like sit back and manage this massive portfolio? Or are they looking to like really shake things up even more? What can we tell like looking forward from their recent filings?
Well, one of the really interesting things that jumps out from these 10Ks is they're not standing still. Like if you read through their 2021 filing, for example, they talk a lot about growing their assets under management, which is essentially like the war chest they use to make all these deals. And they specifically call out like actively seeking out new investment strategies.
Strategies. Okay, so it's not just like buying up more companies and calling it a day.
Right. Exactly. They even go as far as mentioning like developing new investment structures and products, which to me kind of hints at a move beyond like the traditional private equity playbook, almost like they want to become this like one-stop shop for any investor, big or small.
Wow, that's a bold ambition. But let's be realistic for a second here. The financial landscape, it's not exactly static. It's always changing. What about like the whole issue of increased regulation? I mean, private equity, it's not exactly been a stranger to like scrutiny over the past, several years.
Yeah, that's a good point. And to their credit, it is something they directly acknowledge in their filings. They mention things like, increased scrutiny on fees, tighter disclosure requirements, even the possibility of like tax law changes, which could really impact their business.
So they're aware of these like potential storms brewing, but do they seem genuinely like worried about it?
Yeah.
Or is it more of a passing mention, just for appearances?
I wouldn't dismiss it as just for show. The tone, at least how I read it, suggests a healthy dose of caution, which honestly makes sense in such a like dynamic and frankly unpredictable field. They're clearly acknowledging that the rules of the game could change, and it seems like they're at least trying to like get ahead of it.
Right, adapt or become extinct, right? It's
Exactly.
a good lesson for any business, really. But okay, we've covered a lot of ground here, from like the nitty-gritty of private equity to KKR's, supersized portfolio, their future plans. But I want to like step back for a second. Why should this even matter to like the average person out there?
That's the million-dollar question, right? And it's one I always encourage people to ask, because these firms, they don't operate in a vacuum. Their decisions, the investments they make, it has these ripple effects. I mean, they touch every corner of the economy.
Right. So it's not just about like the billions of dollars that they're making. It's about the impact on jobs, industries, potentially even like people's retirements, right?
Absolutely. I mean, think about it. Understanding how these firms operate, what their motivations are, the risks they're willing to take, it gives you a much more, I think, informed view of like the forces that are shaping the entire financial world around you, which ultimately, yeah, affects us all.
That's a great point to kind of end on here. We've gone from like ketchup bottles to clawbacks. We've decoded like these super complex financial statements, and we even got a little bit of a peek, I think, inside the minds of these like Wall Street giants.
Mm-hmm.
And we did it all thanks to the power of these 10K filings. So any final thoughts for our listeners before we wrap up here?
I would just say, if you're interested in this world at all, don't be intimidated. These filings, they might seem kind of dry and honestly a little scary at first glance, but they're an absolute goldmine of information. You just got to be willing to, roll up your sleeves and dig in.
Absolutely. And for those who, maybe want a little bit of a guided tour, a starting point, I always recommend like checking out the company's website. So in this case, KKR.
Yeah.
They usually have like, investor presentations, annual reports, sometimes even like thought leadership pieces where they lay out their grand vision.
Right. And don't underestimate the value of like industry publications, financial news. Staying informed is a key in a world that's constantly evolving.
Couldn't agree more. All right, well, we've reached the end of our KKR deep dive, folks. But remember, the quest for financial knowledge that never truly ends. Keep asking questions, keep exploring, and most importantly, keep diving deep.